Hey, all, welcome back to Swing Trading. Great to be back with you. Mike Fairborn here. Hope you had a long, extended weekend. It was a good weekend. Always that extra day does help to catch up on a little bit of rest and whatnot. But welcome in today, folks. Today, I want to talk today about three key measures that traders can take to potentially control risks. And each one of these are kind of simple and straightforward and hopefully easy to kind of replicate here. And hopefully there's some logic behind them as well. So that's kind of the whole idea today because, when we're dealing with that shorter term time frame that we talk about with swing trades, 3 to 10 days oftentimes we'll be looking at. Sometimes a little bit longer, but generally in that range. It's very, very important to make sure that we've got a really good sense of controlling that potential stop, or that potential exit level, so that we can lock in possible gains there. So look forward to diving into that with you today. We do have Cam May in the chat. Appreciate Cam being here to help out in the chat. Folks, welcome to all of you. Definitely let us know questions, comments you have in the chat as we go through this. I'll try to keep an eye on that as well. I know Cam does a great job in that regard, folks. But want to talk today also about just introducing one of the topics. It was a topic that I had you guys in mind. I almost always have you guys in mind because it's a short-term trading time frame, requires a lot of attention to it. But in the class on Friday, I want to go ahead and talk to you about another process for finding potential swing trades that I actually use today to find the stocks, because the one we looked at last week, we just don't have as many picks out there. So it's a different approach. We'll go through that as well. So having said that, let's dive into some disclosures to get the show on the road here. Information here is for general information purposes only and should not be considered an individualized recommendation or endorsement of any particular security chart pattern or investment strategy. Options carry a high level of risk and are not suitable for all investors. Spread trading must be done in a margin account. Multiple leg options will involve multiple transaction costs. The paper money software application is for educational purposes only. A stop loss order will not guarantee an execution at or near the activation price. Once activated, they do compete with other incoming market orders. Now, a stop limit order with one of those, you can risk missing the market altogether in a fast-moving market. It may be possible to execute an order at the stop limit price or better. Let's see some final notes here that investing does involve risk, including the loss of principal. And lastly, past performance is no guarantee of future results. All right, well, let's dive into it. I want to hit this just one more time here in terms of a lot of the flag patterns or I should say the patterns that we look at in this class, just so that we can kind of wrap our arms around this time frame that we're looking at, and just kind of realizing, oftentimes we'll be looking in this class at a swing trade that might be comprised of a bull flag. It's going to have the potential for a trend operating behind the scenes. And what we mean by that is simply higher highs and higher lows. You can see that here in this particular chart. And then with that, the trend is bullish. And then in addition, we've got the construction of really the flag pattern itself, which is noted for the pull of the flag, the sideways action with an interesting trend line there, TL for short, and that would be a trend line break. What's interesting about these, and what is important, is when you get that trend line break, it can help sort of help you to understand that the slope of that counter trend, okay, it's counter to the underlying trend, which is up. We're on an upward trend, but that counter trend coming down, when you get a trend line break, that means that the slope of that downward trend has changed, and that change is about right there. Right in that area right there, you'll see a change occur. And there's no guarantees out there, but it's oftentimes an indication that the trend may begin to start inching up higher. That's kind of the understanding. And then, of course, with a flag pull or a lot of these price patterns, you do get targets. Now, today I wanted to talk about this area here specifically. We'll look at three key ways to look at potential exits on the chart itself that have been going in our favor, or even after we just got in. Because as we mentioned, one of the key goals is you want to make sure that when, if it doesn't break out and prices do begin to come back down here, and sometimes they'll do this, they'll come down here, they'll break out, and then they'll maybe even test a little bit lower. Sometimes they'll ultimately go higher. Sometimes they won't. Sometimes they'll continue on down. But the whole idea is not really taking this whole area as a potential loss. You don't want, the one thing you don't want is you don't want, I'm going to draw this in red, you don't want an exit down here, which may in fact be equivalent to the price move that you're expecting over here. You don't want to take that kind of a loss. In fact, what we're really looking at doing is keeping it very, very tight. We're trying to get as many probabilities as we can on our side. Last week we talked about volume and how volume can lead price action. We're not going to forget that. That's an important concept to keep in mind. But it's this little movement down here. Maybe that's all the risk we want to take, at least with what's within our control. Sometimes there can be an earnings announcement out here, and with earnings, yeah, you can see a substantial dip. I mean, if you trade ahead of earnings, there can be a big dip, and sometimes prices might, open up down here and start lower. They can open up lower. They can open up higher. There is just that additional risk element. What I'm referring to is just the general risk that that we might be able to try to put within our control outside of any major moves within the stock, and that is the key point of what we want to dive into today. So let's do that. In fact, what I want to do is start off next just by going into the market itself. Big picture here. Do you guys like the white background? Normally, it's a little bit sharp on my eyes, so I generally will go with the darker look and feel. I'd flip that when I had come over to this chart. So we'll just go ahead and do this, make it a little bit easier on the eyes. Clearly more easier on my eyes, guys, because I'm like looking at all kinds of lights right here, and that's just one major light to look at. A little easier to kind of detect. All right. Well, let's look at this. Now, we did see actually a bit of a trend line break here occur on the S&P 500 index, as you can see over here, clearing these highs right over here above this top. In fact, what we did last Friday is we actually closed above that level. Now, we are breaking, and a lot of times, we might look at a double confirmation, a second day follow through. Markets aren't closed yet. In fact, we still have about roughly 15 minutes left to the market close. But you can see over here, yeah, we're already starting to move up again. And this could all be really much in line with the way we're looking at some of the swing trades today. What is the market doing behind the scenes? Are we seeing strength of the market? If we were looking at bullish trades right now, and the market conversely was doing something like this and breaking lower, how many of you would be a little bit concerned that maybe the bull flags that are possibly out there on a swing trade basis, that 3 to 10 days time frame, how many of you would be a little bit shy maybe of putting on those trades? I mean, I would be, because the market would be working against us. Now, when it is going lower, that would be maybe some opportunities for some bear flags, which we're absolutely going to do. But we want to kind of keep things in line with the market. What is the underlying probability? Possibly if the market's doing better, that sometimes has a tendency to lift many boats up. So that's the only reason why I wanted to break that down and kind of pause and take a look at the market right now. But that all else is being equal. Now, what would we call this over here, though? Right along that level. We held there, I want to say about a week and a half. Yeah, almost 2 weeks. We held at that level. Well, I know many of you were inching to say it. That would be called resistance. And I'll just put an R up there for short, but that's resistance to that level. And we're still kind of, reaching up to that point where we get there. Sometimes that might be a key target for a flag type pattern to go up. Now, I don't think that this is actually a flag pattern really under the truest definition, because in this class, remember when we look at flag patterns, let's just use these drawing tools over here real quick. I wasn't actually going to go into this, but I think it's an interesting point to bring up. If I draw this off the low and to the high on the Fibonacci level, we're just going to see here that we're well below the 61.8 in terms of this pullback, if in fact this was the pull of the flag. And this is the consolidation. Folks, we cleared 61.8. And we've talked about this in this class. If you break below the 61.8% Fibonacci retracement, a lot of traders will just say there's just a higher risk of actually the market or the stock going lower. We went higher, and this is the market. It's made up of 500 companies. We still ended up going higher, and we broke this trend line, which actually kind of says to a lot of traders that there's more probabilities now of retesting this resistance up top or even going higher getting past the presidential inauguration now. Okay? So, in other words, bottom line is, question I just wanted you to all ask yourself, are we bullish or bearish given the structure of the market? That's kind of one of the key points I wanted to bring up here. And we're kind of looking at it as saying it's bullish. So we're going to stick with that today because we are breaking that trend line. Now, the first thing I want to do, I want to talk about our last position that we did put on. This was on snow or snowflake. Okay, remember we were looking at this position that we had. I want to review this first because we're going to be going through these each and every week for potential, adjustments to the trade, or just to kind of check in and see how these paper trades are doing. This was kind of that cup and handle that we talked about previously that did knock out that trend line. And I mentioned to you guys, hey, if we're going to get above that trend line, we are going to buy into this position. So thus far, it's been doing okay. This is going to be a great setup because now we can talk about some of the possible exits that we could look at here. Because there are kind of three key ones we'll focus in on here. But before we go there, let's just see how this position is doing right now. I think we just got 100 shares on it. So it's up maybe in the 8 range. Again, this is just a paper trade, but we're monitoring it right now. And we're kind of getting a sense of, remember the first target on where this trade, where we could exit this trade. Where was that first target at? Where might it be? And you guys might have other targets, but there was one specific to this class that we talked about, kind of near that pole, as you recall, the pole of the move. By the way, Robert says channel breakout. Absolutely. It is a breakout there. You're getting a breakout above that range. And now we're going possibly back in the direction of, what was it? The underlying trend as was established here with that big earnings move too. Where might that first target be though? You guys remember that? It was right up towards, if we have this, let's just draw this out right now. If this was our price pattern here going up. Now, Manisha, I think that's where you're heading. Yeah. Manisha, I'm sorry. Manisha, exactly. So that's like the pole of the flag, right? It was actually a really cool measuring gap that came right in there as well. Do you see that measurement gap? That's one of the 3 key gaps out there, a measurement gap. I'm just going to put an M in there. But basically you measure the bottom off up to the gap, and then you measure the gap up to the top. And I think we basically were within this range where we hit it. That's just kind of a side note, but that just kind of underlies and kind of sort of underscores the top of the pole of the flag, which was right over here. Okay, I've officially run out of colors. I've used all 3. But the top of the pole of the flag is going to be our target. If you remember this from last week, target 1. We also said if you measure the entire flagpole, the entirety of this range, and then we add this up to here, well, it's maybe a little bit higher. I don't have an exact range on there, but that could be a target too. But in the meantime, whatever we're deciding to do on this, we do have 100 shares of stock that we put on this stock, and we're just kind of monitoring it at this point. Now, what I want to do each and every week as we go through this is let's go ahead now and look at some of what we talked about last week. What about the volume specifically? Let's zoom in on it, and I'm going to highlight this range. This is really kind of important to keep an eye on here. And this volume, folks, got so weak. Let me pull it up here. Do you see that? What do you see when you see volume? We talked about it last week. What do we want to see volume doing when prices are going higher? Kind of a key hint over there was something like we saw over here. We want to see it, it's not very perfect, but generally that is going higher above a range. And we talked about this. I'm going to quickly throw it on. But this is going to be a simple moving average in terms of an indicator. And that simple moving average is going to be over a 30-day. And we're going to put it on volume, which is one of the options here. It's so nice to have. But are we above it or are we below it? Does that help? You really got to zoom in to kind of show you. We are below it post trend line break. We broke above that trend line. Our expectation, folks, is, well, it would be bullish since it's a break above that line and the trend's going higher. Now, prices have moved, and that's okay for our position. That's what we were looking for. But look at that volume kind of waning down. We're really looking forward, and we're almost done for the day. I mean, we've got, 45 minutes left in the day. But if you look over here with me, we're still trading below that moving average. That would be, we use red for sure. I mean, that's going to be construed as a negative. That's a negative there. Down below, we actually have the collective volume, which kind of helps to offset this a little bit, which can happen with the money flow. If you saw last week's class, money flow actually showing some strength. We're actually taking out those highs, and that's a positive. So generally when this occurs, what traders will do is they're waiting for signs of volume to spike here. But that is really clearly a positive over here. Cumulatively speaking, we are going higher. And generally that means that according to money flow, is it nets out buyers and sellers, that all else is a positive because we're going up. We're getting close. As a matter of fact, though, let me show you this. Coming up to our pole, how much more do we have to get up, generally speaking, to our initial target? Click 3 times. Oh, cool. 3 times is the charm. There you go. So right in this, it's about $10 more roughly. We're about 174. It's about 184, 185, $10, $11 or so that could still be in this particular move. Okay. We've actually been in it for about, 3-4 days. We're looking at, like I said, again, maybe 10 days, 10, sometimes 14, maybe on the high end, basically generally getting to about, a couple weeks time frame or so, a couple calendar months. But look at, we're kind of just inching on up. It's steady as she goes. This is a good situation to be in, all else equal, but we've made some gains. So what could we do to kind of lock in those gains? Well, I want to go through that right now as we talk about just some ways to potentially, control the risk as best we can within the potential that we have. There's not really a way to control it, but we can set particular exit areas, and those could be stop levels. We talked about that just a second ago on the stops, but what would be the first thing we could look at? I'm going to talk about kind of a maximum level of risk first that we might take on a swing trade. So it's a shorter term time frame, so we're talking about a max risk level. By the way, again, that we can control. Remember, the market can have something to say about our max risk because we don't know. We don't know. Sometimes things can go crazy in the market. Sometimes it can open up down here. Just on any given day, you can see earnings out here. Our kind of move was ahead of earnings, but we still have some time before we get there, but there's still the possibility of that happening. So I'm just saying within our control. Okay, so let me show you what this would look like. Max risk is going to be the prior day's low. So if we trade literally just one tick below the prior day low, and I'm actually going to narrow my drawing tool down to highlight this for you a little bit. Yeah, this will be better. Okay, so where's the prior day low? Well, we know it's right there. Really, let me zoom in a little bit more. Let's kill that. Okay, back to it. Here's today, and here was that's not yesterday, that was Friday. This point right here, our low, on our max risk level that we can control is right there. So it's just basically right below 170. In other words, if this move is expected to go higher, it should be a fairly steady march going up, at least to this point, if in fact somebody wants to take a T1 target, a target 1 at the prior high range. Now, this could be a very, very big run too. And that's something we need to consider because there's a big long-term cup and handle in here. But that's sort of the risk that we're looking at right there. So I'm going to put that in. That is risk. That's your max level of risk right there that you might be considering for this move because, again, I mean, the range we're looking to take is going to be somewhere in here. Let me get the bigger size to kind of highlight this. But let's say our entry was just like right in here. And so if our initial target is at T1, right at that high, okay, there's a range here. We need to make sure that that potential risk is smaller and hopefully significantly smaller than this return here. Now, even if we hit this level and the market were just to slowly move down and we were to get out at this point, we could still be profitable on this trade. What does help us here is a day to day to day higher, inching higher of the chart. Because what that can do is that can help, even from this max loss scenario, to really help to lock in a bigger potential gain. Do you see it? Because every day that goes by, if we have another day that goes up a little bit, what happens, folks, to our max gain? Let's just do it. Let's draw it in. We'll go back to our blue. Let's just say prices go up one more day. Now, our max gain, our max risk, I should say, our max risk moved from this level to this level. If it goes up one more day, it moves again up. Okay. The only exception here is if we had a big gap up in price. The prior day, if we start, well, that could act as a day. And then you'd be looking at the next day's move going below, potentially below that level for an exit. So that would still be fine. That would still work. Any questions on the max loss kind of an area? That's the max risk that we'd be looking at. And like I said, that we can control. It's not going to be, I can't say categorically it's the max loss because that would be false. There's too many situations that could occur in the market, of course. Too many things that could happen. So, but within what we're doing within kind of our system we're talking about. Okay, so this is just going to be things that we're going to be using going forward. Let me just take a quick look at the chat. You guys all on board? I think so. I think we're okay. All right. So next thing is what we want to look at is maybe the mid-level risk. To help us with that, today I wanted to just talk about like it's an exponential moving average. Now to get that, you got to come over here and type in EXP. Exponential moving average. Click on it right there. It's not a simple moving average. It's a little bit quicker than the simple. It puts more emphasis on the more recent time frame. Let's click on our wheel. I'm going to go ahead and show study. I've got to change the color so we can actually see it. All right, boom, boom. There you go. Okay, so that is an exponential 10 moving average right there. Now, notice this is interesting. It's actually, in terms of what we were saying in terms of our max loss right now, it can change because sometimes that exponential moving average can really pick up once the trend starts. And that's kind of like, it's almost like a trailing risk gauge. And you'll notice over here on a lot of these, and we've talked about this previously, this is snow. And snow just recently had this run over here. But if we go back to snow, it actually works really well on the downside too, potentially. But I don't know, any other stock we can throw one out here that's been moving. In a lot of cases, you might not get below that exponential moving, close below it. You can see over here, once you got above it, kind of held. And the whole idea is to kind of hold over here too. When you break above a range or over here above a range, it could be a possible exit strategy. So trading below that 10-period exponential moving average. I can keep it on the chart now as we continue on here, but I'm going to jump back now to our stock so we can have that in mind. Okay? Everybody good with that thus far? All right. The next one and the last one is going to really like short term. But if we start to trade, we're really looking at not the prior day's low, but if we start to break today's low that's been established, if we start to break lower, that could be one. But we don't want to forget what comes very close to that is an ATR. So I just want to kind of highlight, a lot of times it's the low towards the low of the day, but an ATR, an average true range, again, we looked at this is just a 14-period ATR. This is going to show up, let's go ahead and thicken this up just a little bit. This will show up towards the bottom. And this is a volatility sort of adjusted stop. And you can see over here, that is an ATR is about a 6-point, right now it's at 6. So if we look at this where we're at right now, where does that 6-point stop put us? Oh, I gotta change my time frame again. This could be considered a shorter term time frame, but that ATR, we're looking at a stop level of about 6. Oh, it's kind of coming in the same area. That's a full ATR. or a half ATR, which is about 3. And you're getting close towards the low of today. So a 1 ATR, depending upon where we're at, or a 1/2 ATR, in that case, it's going to be a 3. Now, if the trend is up, a lot of times they'll be locking in and looking at a 3 ATR, really from the opening price of that bar. So really like a 3 ATR right there. I should say a 3-point move. Remember, this is a volatility adjusted stop, and this is one that can be used when the trend has really started to strengthen and go to the upside. Now, that's really, really quite short term. That can work well when prices are really like this. They're really strong to the upside. They're so strong that even like your 10 period EMA is like way down here. Sometimes the bars are so big, you don't want to give up that space. So what you're simply going to do is just take a 1/2 ATR of the move, 1/2 ATR. And if you start to break below that 1/2 ATR, which is at a 3, you're just kind of tracking this and trailing this each and every day from the open, right? From the opening price, wherever that opens up at, if you start to go below that 1/2 ATR, but that's oftentimes if you're in a really, really strong trend, we have to identify it because there are different forms of stops out there, or potential exits that we could be looking at. So that's just to get us, if we're breaking out up to our target 1. Okay, I think some of these are really easy. The first two, clearly very straightforward. You trading below the low of the prior day. The midpoint range, oftentimes, although it's a little bit lower than we're at right now, or just one that sometimes traders will use, is that 10 period moving average. That would be a trade below the 10 period moving exponential, 10 period exponential moving average. And finally, the last one, if you're in a really, really strong trend, you want to try to capture some gains, you could be using something like a 1/2 of an ATR move over here. I've even seen some people use like a 1/4 ATR move if they're really looking at locking in gains on a really strong move to the upside. Okay, so those are a few that I wanted to bring up today. I want to go ahead and address maybe 3 new positions today we can be looking at in terms of trades. So let's go through those right now. I want to take a look at a few of these. I want to show you too. This, I'll add it in right now. This parabolic SAR was one that I discussed on Friday in that ThinkScript class, and I wanted to. I was thinking about you guys specifically because I wanted to tie it in to kind of a swing trade kind of a scenario where you're getting higher highs, and then you're also getting this parabolic SAR indication on the chart as well, which can also, it sort of acts as like a moving average. It's an indicator that it's really just actually the stop and reverse indicator. But when it's trending up higher, a lot of times you get these wide ranging gaps where you're just going to get, prices never really break below the dotted lines, which is an acceleration of the move to the upside. So it's a little bit different. It is somewhat similar, though, to the exponential moving average. You can see how close it does connect to it, but it can speed up, it can slow down. It's a different sort of an approach. I threw this out there because I used it today to find some of those trades. Here is, let me just throw out the link into the chat just so you have it. This is the link for that class if you want to take a look at it. This is where I got a number of the trades that we were looking at today in terms of the swing trades, but that's it right there. I explained it in that class if you're interested in it, but it's also just looking at an upward move. The stock's trending higher, plus you've got that parabolic SAR in there. Okay, to look at it. Now, let's move on to the next one here, and let's look at Amazon. This actually came up is just starting a parabolic SAR within the last 2 days, as we're actually breaking above a range over here over the last 20 bars. And you can see where we're at right now. Let's actually, I'm going to take it off. I'm going to get less indications on here so we can see our chart first. We can always add these back in. There we go. Take these 2 off, but it was signaled there, and there is kind of prices going higher in terms of Amazon. All right. Couple things to look at here. Does everybody see where sort of that neckline could be, or as Robert said earlier, where the channel could be on Amazon? Everybody seeing that? Can you pick up on it? Where we might be drawing those lines across the board. It ties back in to, whoever it was that created these slides over here, you can still just see that channel line coming in here, right off our script, our slides here. Bar coming down. We're looking for the possibility of a breakout. Folks, did we get that breakout or not? Remember the indicator we're using down here is just the diagonal line. Click on it right here. Let's draw it off the top, and we'll just extend this down to the next point right there. So you can see clearly we broke above it. Will we close above it? It looks like the probabilities might favor we'll close above it because there's only 30 minutes left in the trading day. So that could fit a scenario that we'd be looking at, right, for a potential entry point. We're actually going to put a trade on here. But I want to mix this up just a little bit because where are we trading at right now relative to resistance? You get this when you have these very, very short and tight flag patterns. Case in point, we pull over here. If I just go like this, I mean, if we just barely move up, that's not a lot of ground. We didn't really get sort of a confirmation here, did we? Not until we got off the bottom here. I mean, we could have said there was a K hold, sure, and it would have worked to this point for sure, but it could have still continued to go sideways here in this flag tied pattern. See the sideways? There we go. We actually broke up above this now, but my gosh, we're already at resistance. We're already there. We're so close. I mean, what are we, a point away? I think we actually bounced off resistance earlier today. Like there's the high. Oh, we came so close to that high right there. Do you see it? So we might consolidate further. You might make a higher low and then break out. But what could we do at this point in time to get into a trade like this? Well, we're already at resistance, and we're going to run into this quite a bit. So I thought this was a great example. I mean, if you look at any trades, I mean, sometimes you're just going to get these really, really tight flag patterns. They're going to make you kind of determine, do we, maybe add in after the breakout? Do we add in some before the breakout? Well, any thoughts on that? What are you guys thinking? I'll tell you what I'm thinking. We could say, well, if we were going to buy 100 shares, just using it as a round number, why don't we just take half of that at this initial point? Because we're right at resistance. And so we'll just cut that in half and say, what about 50 now? Let's run through that scenario. We buy 50 shares right now before the close. What would be kind of a loss scenario for us? Well, the loss would be, as of tomorrow, wherever we might open up at, well, kind of the max risk that we can control, right? Not the market again, but what we can control would be below the prior day's low. Okay. We could also look at, throw it on just so we could see it all in one shot. Let's add it in. Here's our show study for our 10-period moving average. So it's down a little bit still. So, we definitely would want to, we stick with our max risk first, which is this low. We think that it's going to continue to go up. So we're very cautious about it. But this is where that those 50 shares really make a huge difference. Because if we come over here and we look at this, think in terms of risk with me, folks, now. In terms of risk, if we're here and let's say we open up wherever it is, we'll just say we open up near today's high. If we dip here, and I've got to drop all this, so it's going to mess this up, but I'll just show you. Let's say we buy here, and we're looking at the risk right there. Okay, well, that's going to be like gosh, I can't even see it now. Let me clear it off. Sometimes the prices on these breakouts are going to be towards the upper end of the range, so we're constantly going to be having to adjust our y-axis. But right there, so it's about $4. It's about a $4 decline. And you say, Mike, well, if we had 100 shares, that's $400. 400, right? Dollars. I'm sorry, no, it's more than that. Yeah, I'm sorry. No, it's 100 shares. So 100 shares, and you look at just I got to put approximates in here so I don't get confused. Approximately $400. But we're looking at 50 shares. And so that could be half of this, too. So maybe we can cut it down to 200 shares as we're waiting to sort of build a position here. Because, well, where are we at? We're right at resistance over here. and we could dip off of that resistance. And so let's start off with a 50 share here. We have some risk levels in mind, a max risk that we're willing to take over here. The moving average again has not yet begun to start up higher. We could look at a 2 ATR, but we're just barely, I should say a half ATR, but we're just barely getting started. So let's go ahead and start out with that right now. That would be a 50 share position. Now, by the way, this could be totally adjusted to whatever we'd be looking at. There's 100. I'm going to change this to 50 right now, and I'll tab on over so you can see that. We'll do confirm and send. Obviously, you'd want to look at this and be mindful of it. It's only 50 shares relative to the 100, cutting it in half. There's your buying power effect, as you can see right there, and the cost of the trade. Now, it's expensive, so some traders might use, obviously, less than that. There's our fill right there. But I'm going to do this right on the chart. I'm going to put a notification right over here so that if I break above this level and continue on higher, we can maybe add those additional 50 shares. You have to be very, very careful with this. I'm just going to say breakout, question mark, because we are adding more to the position, right? And always got to be very, very careful when you're adding. You're doubling the number of shares. So very, very important to monitor there. Okay, so that's what we got for Amazon. Next one, GEHC. Pulling down, dipping a little bit lower here. Okay, so as we're dipping lower, we broke, we have a flag pattern, maybe a change in trend over here too, right there, kind of actually bouncing off some of these exponential moving averages as well. But you see we'll just draw a little line right through there. Oh, a little trend line. So we're breaking in, showing some good indications here as well. But look at this, we're right back to actually the same resistance level. This high over here is testing where we're at right there. So I'm just going to put this in because we just don't know. I mean, we've actually backed off today's level a little bit. So we're going to do something similar here as well and kind of break this down. We're going to say, well, why don't we just do the same thing that we were just looking at with a max loss of really, depending upon where we open up tomorrow, the prior day, I'm just averaging a price in there, for example, that would be the max loss is trading below that level. But the true target range of this flag pattern could be something like this, which takes us very, very close to our prior high. And we're going to run into this quite a bit. So this might be from this level here, right, where you draw it off the bottom of the move. Actually, I'm sorry. We've drawn off the bottom of this move right here. So it might be a little bit lower. In fact, if that's our pull, I'm going to do a little bit better estimate for us. We've got to, let's see, 1, 2, 3, 4. Yeah, right there. I do that right? Yeah, that's 4. Look at this. Right there. Right to the prior highs. That could be that's kind of the target for the flag, but we just don't know what to expect here. We could get in here. Now, some traders who are aggressive could say, Mike, I've already got a bounce here, but to be honest with you, folks, this is just the first. If we close above the high, the low day today, this is our first hold pattern right there. Close above the high of the low day. Interesting. This is going to happen quite a bit when you're getting these tight ranges in here. Sometimes you're not going to get the K-hold until like right now, and we're actually getting the K-hold at the same time, possibly. We haven't closed yet, so I can't say that. But if we do close above the high of the low day, which is that bar right there, right? That was our low bar. It's actually the trend line break as well. Right through there, you can get it. If I were to line it up, you get it. But there's your low bar, hold right there. So this bar is really representative of a couple of different entry points, but we are at resistance, and we want to respect that resistance. Unless we're, somebody's just really, really bullish and optimistic, they might go for a full position, whether it be, 100 shares, 200, 500, whatever it is. We're just talking about paper money here, but just, across the board, whatever number it is you might be looking at. Okay. Now, a quick note, how are we doing down here on our volume? Well, we're below this, but we came off a little bit higher here. Let's just see if we can start to come up higher and approach a higher level, because the money flow, that's not it right there. The money flow is just barely starting to creep up. So keep an eye on this as well. So the money flow could be of interest to us too. But we're watching it carefully. It has not broken a new high, the money flow. Yet prices have broken a new high over here today. Question mark. Volumes in question. I'm going to go with a half position here. If we close above this level, perhaps we can add that additional 50 shares. Okay, it's a short-term time frame, and we got to make sure, at the end of the day, we're really doing what we can with what's in our control to control our risk versus our potential return or reward. Okay, there's just a 50 contract position, but we'll add this into our portfolio right now, paper money portfolio. There's your buying power effect, just over 2,100. I wanted to add that in right now. Okay, a final one, and we're just about out of time here, but I want to throw this out here too. I know many of you, well, I don't know, many of you very familiar with Costco. Here is Costco, one that also came up on that parabolic SAR screen, which was interesting on a Friday. You can see if this was a long-term consolidation, well, we just broke above it today. Friday. We broke above it Friday, but we tested higher, but we came right back down. It's kind of in question here what we're going to do. What I want to do before we're done, and I'm going to speed this up a little bit. I know you guys are familiar with it, but what if you have a scenario here where the pullback's been kind of far back down? Look at this. Look at this pullback here. We dipped all the way down here. If this is our flagpole, we're below the 50%, I think, right here of a pullback. So it's still kind of iffy, but it's got a really super nice upward trend. Let's pull it up. There's your trend. Costco's been on a run for a while. Will it go higher? Some people might, be comfortable believing it is. Look at the price. It's very expensive. So what I want to do right now is I actually just want to look at one aspect at the very end here, and that would be doing a sort of a swing trade, but in a short put vertical format. So just trying to collect income from the short option over a 3 to 14 day period using the current upfront month contract. Okay, so we're looking at the hold above a range. And I might look at it down actually here. Give us a range back near these support levels, maybe about 915 or so. Okay, generally speaking. And I'm only going to go out maybe to the next the month's time frame. This is like a contract period of time, about 30 days out in time. Let's go ahead and look over here. Now the delta gives us a sense of the price move of, for every $1 increase in the option, the delta would push the price of the option up or down based upon the delta for a $1 increase in the price of the underlying stock. A lot of times traders are looking for this range over here, the 30 to 20, about 20 to 40 range. I'm going to go ahead and choose that 15 right there at this level. And then I'm going to buy a contract just over here right below it on a 5 wide. So it's only $1.02 credit. Did I do that right? That's $102. But let's go ahead and take a look at that right now. And if the price of the stock could generally hold above that level, that's our margin requirement right here. But we're looking to capture maybe a gain of $95 if it holds above that range. Still trying to participate in that upward move, that breakout, that possible breakout if it does unfold. There's your max profit, and your break even is about 914. Let's go ahead and send this guy through, and we'll have this in here. So it's a way to, hey, maybe we will end up placing a stock trade on it, but ultimately right now, we're going to give it a little bit more flexibility. That's quite a ways down, about 915 over that next period of time. We're just letting this, try to see if we can burn up some time there. All right, folks. Well, on that, we wanted to throw that in, but we did 3 example trades today. We really did talk about the core, though, of doing exits on the stock trade specifically. By the way, the same concept holds true here. We can get out using those same potential exit levels. So we looked at GEHC and AMZN as we went through there, folks. If you like today's presentation, smash that like button. Also, bottom right hand corner of the screen, really simple and easy to do. Just click on that subscribe. Love to have you on board. Well, that is what I've got for today, folks. There is a feedback link. If you can click on that, would really appreciate it. It only takes, I think there's only 2 questions in there. So thank you, Cam, so much for your help. But we'll go through there. Randy, I'm going to go ahead and put in on those trades. I'll put in some alerts below there so I can take a look at that. But yeah, generally we could be looking at stops. We'll be doing that going forward. But I wanted to look at exits, possible exits. I didn't really choose one specifically. I want to give you a range, but hopefully you have a sense of where to potentially put those stops at. All right, folks. On that note, have a great day, everybody. Bye-bye.